Good day everyone, and welcome to our weekly outlook video where we're going to discuss a bit and highlight what I anticipate the coming week to go about. So recapping from last week's video, I was anticipating dollar to push further high, but that didn't happen due to a certain number of factors, including the job report that came out last week, the week before. I mean, the numbers were bad, and also the impeachment process. There wasn't much confidence in the market regarding the dollar because of that ongoing process, which was concluded yesterday, where the vote came out in favor of Trump, so he won't be impeached. And we also had a couple of bad numbers, including the core CPI news that came out, I think, on Thursday, if I'm not mistaken. So all those contributed to a weaker dollar. But as an institutional trader, guys, remember, like what I said in the last outlook video, you have to be in a position to analyze and react to what price is doing. As you all know, we filled up the monthly fair value gap. It was filled up. So yes, there was bound to be a correction to the upside. I'm still of the fact that dollar is gonna push high, because right now we are trading in a higher time frame demand. We are trading in a higher time frame demand zone. As you can see from what I've just highlighted, price is right trading at near or close to the 50% mean threshold of our bullish order block. So that in itself, as long as prices are still above 90.15, as long as price is still above 90.15, I am going to be hunting for long trades. But that does not mean I cannot short dollar. When the setup presents itself, I can be in a position to short the dollar. But as long as price is staying above 90.15, I have to be cautious in taking short trades on dollar. So now, since we all know that price is trading around the optimum entry for our longs, which is the 50% mean threshold of the bullish order block right here. Since we all know that, then we need to just mark out the price points where we anticipate price to rally to. And you can see from here, we filled the fair value gap. Price action filled the fair value gap, which was here. This is from last week's, I think 2 weeks ago. We had a fair value gap there, which was filled to the upside. We had buy stops above 91.50. We had buy stops above there that were cleared, and then we saw a huge rejection to the downside. We had market push all the way back to the monthly bullish order block, right? So now, with that said, what else do we have to consider in terms of order flow? What else do we have to consider for us to say, okay, no, we are going to see higher prices? If you look at the current monthly candle, which is only 2 weeks, right? We're going into the third week now of February. We're going into the third week of February, and already the past 2 weeks have shown us price has got that willingness to trade to the upside, right? Price has already shown us its willingness to move higher, to trade to the upside. We have already seen that. this wick represents price. At one point, this candle was a big bullish candle, so we can't ignore that, right? As much as we can't ignore also the rejection to the downside, but that willingness of price pushing to the upside is crucial in this setup. Now, when we drop to a lower time frame, we go to our weekly. Now, on the weekly chart, you can see we had price ranging, and eventually we broke out of this bearish order block. It was broken here, and then price pushed up close to the fair value gap. But when we look at this high and the low of this candle here, let me just highlight that. The low of this candle and this high, there is a gap in between there. We have got a gap, so that's 595. Above that gap, we've got buy stops, right? This becomes clearer when we go to a lower time frame. So we've got buy stops above here. Remember, we are looking for higher prices. Our market structure is showing that price will trade to the upside. Now we have got price consolidating. Friday, Thursday, and Wednesday of last week, we had a consolidation in price, and then we got that huge rejection before close of Friday. We have to take note of that. Now on the weekly, we also have to take note of this bullish order block here. This now is crucial. You can see price is finding support at the 50% mean threshold of this bullish order block here. You can see we've got price finding support here. It's not a coincidence that these two Wednesday and Thursday candles, they found support there at around that is around 90.23. So when you see price dropping back into 90.20, which is our institutional price point, you need to be hunting for what? For long entries, with the anticipation that this bullish order block here, with this demand that was created, we had an impulsive price move to the upside. That in itself, you see this move. Then we've got this move here. That is the willingness of price showing us that it wants to move to the upside. Now, for those that didn't come to class on Saturday, I did highlight the concept of equilibrium versus discount, where we are in a buy model and we are looking for price to trade below our equilibrium point, thereby it will be offering us what? Discounted price, where we will be hunting for long entries. Then we also discussed equilibrium versus premium, that is in a sell model, where we'll be hunting for short trades when price trades above the equilibrium, meaning it's in a premium range. So with your fibs from this low to this high, which is our swing point, right? From the low to the high, let me do this on a clean chart so that you can clearly see. I'll revert back to this chart here. So we are on a daily chart. So right now we are in a buy model on dollar index. So meaning we are hunting for what? For longs. That means we're in a buy model, so we are looking for price to drop down below our equilibrium point for us to hunt for long entries. So from this swing low to this swing high, right? You can see we've got our equilibrium price point here. We've got our equilibrium price point here, 90.30. So as long as price trades below 90.30, in between this range, this is your hunting ground for long entries. So we can practically do like this here. We grab our rectangle 2 from the equilibrium point to the 70%, which is our OTE, optimum trade entry. In that range, we are going to be hunting for long entries. Now, there's a whole bunch of confluence that you can use. In this case, we've got a bullish order block here, right? We've got a bullish order block here. When price trades below the equilibrium price point, we are looking for long entries. So now, reverting back to my monthly, this is my main analysis chart. So as long as price drops into this bullish order block, we're going to be hunting for long entries. But if price breaks below the 79% range, that is below 89.66, if price breaks below, then you need to wait, because there's higher chances that the market can turn strong bearish, because would have broken here, would have broken all these guys. So market could keep going all the way to the downside. So I hope you understand what I'm saying here in relation to dollar index. Yes, we saw weakness in dollar. We saw huge weakness last week. That was to be anticipated after we closed the fair value gap. So if you are anticipating longs in this range here, your first target for price to reach out for is up here at 91.60. 91.60 will be your first target on Euro USD, and then second target you're looking at 92.23 and long-term target of 93.0. So that's the outlook in regards to dollar index. We are going to be looking for long entries on dollar index from the range between 90.37 and 89.90. That range, our optimum entry is around 90.00. That's our optimum trade entry to the upside on dollar index. So with that said, when we look at Euro USD, the opposite applies. Euro USD, we're going to be hunting for short trades. As you can see, we are on a higher time frame monthly chart. We've got price, we had price, this is a significant swing high to a swing low. If we are long on dollar, we're going to be hunting for price to reach our premium price range on Euro USD. Remember, it means we are now in a sell model on Euro USD. Once price reaches our premium range, the premium range now on Euro USD is the price point between the equilibrium and the 62 to the 70% range. This range here, specifically the 1.25 price point, is an ideal area to be short. So any prices above 1.21, those are your hunting ground for short trades. You can also use this swing point here. Let me just do that. Let me get rid of this. We've got the swing high here, then we have a swing low. So your short entries, price is above equilibrium. In this range, you are looking for shorting positions. So now when you go to a lower time frame on dollar index, when you go to a lower time frame, so this is our daily, we've got our swing high, and then we have our swing low. You can see price hasn't still reached the equilibrium point, so it's this range here. In this range, that's where we are anticipating price to trade to the downside. So now it's now up to you now to define your order flow. As you can see from here, we've got a bullish order block in this range here. We've got a bullish order block where we'll be hunting for short trades. So as long as price trades above the equilibrium point, dollar index on Euro USD, make sure you are hunting for short trades. Your optimum entry is probably around 121.47. You can round that to 121.50, which is your institutional price point. So that means we are long on dollar index. We are short on Euro USD. We are also short on GBP USD. We are long on USD JPY. Now, if you're in the mentorship, you should already know. The analysis that we have done here on dollar index is your template for you to trade NZD USD. I am short on NZD USD since last week Tuesday, and I'm also short on NZD JPY since last week Tuesday, and I'm short CHF JPY. I'm also in a short position from last week. So you already know that if we are anticipating dollar to push up, USD CAD, USD CHF, we are going to be hunting for long entries. I cannot elaborate that any further. If you're in the mentorship, you already know. If you have any questions, then you can send me a message, then we can discuss it from there. And if you haven't joined the mentorship and you want to join, you are all welcome. Just send me a message and we can talk from there. And for those that haven't liked or subscribed to the channel, kindly do so that you don't miss an episode once I upload the videos. And the mentorship group, as always, you're going to get this video first, and it will only be available to the public Wednesday morning. So yeah, I think that's pretty much about it for today. There isn't much to really talk about. Other than that, we just need to keep an eye on where dollar is going to trade to during our Monday's session, and we're going to discuss Monday session before Monday's close on Zoom, as always, so that we can see what are our targets for the rest of the weekend. So yeah, I wish you guys a great trading week and good luck. Thank you.